Okay, so welcome. You are here as the avid learner. So, level 2 in this process. So, as it says here, trading enlightenment is just one more playlist away. What do I mean by that? Well, firstly, I want to commend you as somebody that takes learning seriously and that you're choosing to use that process rather than just necessarily jumping into the market. Now, you may be listening to this and you said, right, I'm going to learn how to trade, and your modus operandi was to place trades and try it and be in it to win it and learn on the job. And suddenly you realize that actually I need to take a step back and learn how to do this properly. Or you've come in and gone, no, before I actually start doing this and placing trades, I'm going to learn to do this, and I'm going to go and build up a lot of information and cross-reference that information and essentially get a process so you can go into the market and do it. Now, the problem with the avid learner is that skill and ability to learn and that want and desire to learn is great. But if the needle, think of it like a pendulum, if that needle or pendulum is swinging too far in one direction, what happens is that learning becomes a compensatory mechanism. And what happens is every time something goes wrong or you have a losing trade, or you're not sure what to do next, you go straight back to learning more information. Now, a lot of the people at this level that I've worked with are still in the learning phase. They haven't quite dipped their toe in the water. Now, you might be listening to this and you've placed a few trades, but primarily you're still thinking, and your mindset is more along the lines of, I need to keep learning, I need to keep learning. If I learn this and I keep studying, getting more material, cross-referencing material, as I've said, I'm going to get better at this. And the case is that the fact is that might not actually end up being what happens. And oftentimes what happens is the learning loop just gets bigger and bigger and bigger, because that's what social media, that's what YouTube wants you to do. Remember, their primary function is to keep you on their platforms, and potentially there isn't the structure there to do it. I remember when we got our new puppy, it's front and center of my mind because we've only had her the best part of 6 weeks. When we got Mabel, we were like, right, we're going to do this properly. And we found ourselves one Sunday on YouTube watching some really good videos showing us one technique on how to train the puppy in a certain way. And then we're watching videos and saying, well, this is slightly different the way that it's being taught over here. That looks really good. Which one's better? And that can often be the problem. When you're eyeing up information, if it's similar, but it's slightly different, your brain can go, well, which one's better? And the problem is you may not either go for either one. You might not be able to make a decision and pick what you should be doing. Or the problem is you keep going around because you're trying to find the information that's the best, which isn't necessarily the most appropriate information for you. And the challenge with a lot of social media is lacking that structure. And what I end up hearing is things like this. I've binged for hours on YouTube, read every PDF, scrolling through countless Discord chats, but it's still all too broad. And a lot of it contradicts itself, and none of it is tailored to my goals. And then you could add to that, as I've said, I don't know if this is the right thing to do or the best thing to do. So ultimately what you end up with, as it says here, there's no structure, most importantly, no feedback, and you don't really know if it's working for you. So these are the key things that you as the avid learner are probably facing or struggling. You might be a little bit earlier on in the journey. You're thinking, no, I'm just consuming information. You might unknowingly be trying to find the holy grail through the information, the best trading strategy, and really not thinking best isn't always the one that gives you the best return. You can have an amazing strategy that gives an amazing return, but if you don't have the skill set or the time or a combination of both of those factors to trade that strategy effectively, the fact that it gives you the best results is no good for you. So there's a lot of other factors at play. So what we're going to do in these videos is we're going to highlight some of the key things that I believe you should be focusing on. We'll go through some teaching processes so you can understand those better, but also I'm going to go through some key action steps for you and some keys to success. But before we do that, let's look at the 7 areas within the trading process. But most importantly, let's look at the areas that I think are important for you to focus on. I'm going to start with analysis. I'll come to the ones below in a second. But analysis, your ability to be able to understand price, the various price mechanisms that are there, and essentially be able to look at a chart using a repeatable framework and a set of specific tools. So you're not chopping and changing all the time. You're not wondering if this tool's better than that tool. You draw a line in the sand and say, using these specific tools, which I'm going to This, I can look at any chart and determine what specific condition that market is in. That's essentially your number one action, number one skill that you need to learn. Now, to learn that skill, you've got to be able to apply that skill. So there needs to be some sort of feedback loop in place so that you actually are able to do that. Because the problem with social media, the problem with learning lots of information is if there's no feedback loop, you don't know if it's relevant to you, you don't know if it's the best and most appropriate thing. But when you're trying to get better at a skill, feedback is critical within that process. And then the second element that's important to you is a repeatable execution method. So that's a set of specific tick box criteria that means when they happen, you take the trade. And again, not chopping and changing these or mixing up analysis for strategy. I will go through this in more detail in video 2, but these are the things that you should be focusing on. And then lastly, here we've got risk management. So if you're going to start playing, you can't keep learning and learning and learning without applying. So what you must make sure you do when you start applying what you've learned is apply the correct risk management. So how much you risk per trade, the distance you run your trades for, and for you and against you, as it says there, because you're going to have some trades that lose, you're going to have trades that win, and you've got to have a pre-planned process to that because you are going to start leaning into measuring these. So if you're caught in this particular area and you're learning lots, but you're struggling to apply it, you're not sure if it's the best, the right, as I've already said, if you can apply the right risk management, even if you get some things wrong, you make mistakes when you execute the trades, you realize that maybe some elements of this strategy aren't appropriate for you. If you're fortunate enough to be getting feedback, then that process can be accelerated. But as you go through and start to see, hang on a minute, this works, this doesn't work, if you've managed risk correctly, then any changes you make, you're in a position where even if that's cost you a few trades, if you're risking the right levels, you're going above 1% when you do this, that means any mistakes are not costing you dearly. Because a lot of what holds a trader back is they're fearful that they're going to start trading and have a run of losers. Well, at some point in your journey, that's going to happen, whether it happens at the start, and you're doing everything incorrectly, whether it happens 2 weeks in and you're doing everything correctly, you're still going to have losing trades even if you're doing everything right. So risk management needs to be something that you focus on, but keep it simple. Think about having trades that have clear entries, stops, and targets, but most importantly, keep the risk management to 1% or less. Don't start worrying about doing things like moving stops and getting involved. The chances are, in your process of trying to find a system, you'll have watched videos on, trading with multiple lots, or legging into a trade, or legging out of a trade, or moving your stop. Because if you move your stop to break even, then you can't have a loser. All of these things are coming into your head and filling your head with information that isn't necessarily the right thing to do at all, or might not be the right thing for you. So keep risk management very, very simple. So ultimately, if we go back to analysis, now you understand what it is, what's probably going wrong where you are. Well, the chances are you're probably just learning too many different things. 1 minute you're looking at Fibonacci, then you're looking at supply and demand, then you're looking at support and resistance, and you're worrying whether it's the difference between supply and demand and who's right, which is better, which is worse. And you've just got an overuse of these, or over learning these things, or you're overlaying the things on your chart. So you're taking what you've learned and you've got tons and tons of indicators all over your charts, and you've just got too much going on. The common theme, if you're learning too much, if you are moving into the applying phase, you're probably trying to apply too much as well. So these become the things to be wary of. So the way that you move forward too is you pick a very specific, no more than 3 analysis tools. I'm going to show you those, and then a framework that you apply, and you keep that simple and measurable. Now, with a strategy, you might be looking and thinking, well, what's the best type of strategy? Should I be trading pullbacks? Should I be trading breakouts? And again, that which is best often comes up, and it's often the question I get asked by somebody in this phase is, which is best? What's the best one? What's the best? And it isn't that pullbacks are better than breakouts. So it depends on what type of entry strategy not only is profitable and gives you an edge, but as I've said earlier, also works for you. So it's so important to bear that in mind. The other thing that's probably happening with risk management is you're wanting to make sure that you do everything you possibly can to win. Where if you go into risk management and when you start to apply what you've learned with the view that you can do everything right and you will have losers, your risk management becomes your safety net rather than worrying about, can I get it right on every trade? So as I've said, that links back to minimal risk. The action step here is stick to trading at no more than 1% risk per trade. I want to touch on data very briefly here. Data, you can see I've got that in yellow because if you can start logging your trades, and logging your trades doesn't simply just mean downloading the result from your broker. As you start trading, obviously you're still primarily in the learning phase and you're probably a little bit more cautious about applying what you've learned. That's essentially the sticking point. But once you do, if you can start logging and analyzing your trade performance, or at least logging your trades, it's often a lot better if you can get somebody else to analyze your performance who knows what they're doing. But if you can log your trades and start to see patterns in your performance, and you can do that right from the off, that's going to put you ahead of the game. So bear that in mind. Obviously, that is not at the expense of working on a very specific analysis process, using the right entry strategy criteria and the right risk management. Do all of those, but then if you can start logging the trades, that essentially is the icing on the cake. So I spoke about this in the level 1 video, and I'm going to go into more detail about the idea of analysis and strategy. Now, the simple concept that our process is built on and that you can apply, and the first framework you want to have in your mind is essentially markets are either doing one of three things. They're either moving sideways, if you look at it relative to that period there, or the market is trending in an upward direction, or if we could draw it and it came down from here, trending in a downward direction. Now, this is the important takeaway. Within that process, there are price moves that are moving up and down. If we look at that upward period there, we're in an upward trend in a sideways moving market. Here, we're in a downward trend in a sideways moving market. Here, we're in an upward trending market because we've broken past the ceiling, broken past the level. And here, what we've got is price moving up and down in an upward trending market. So depending on where you look will depend on what the primary position of that market is. Is it moving sideways? Is it trending up? Is it trending down? And the reason we use that process, and primarily a lot of the time, a higher percentage of the time, markets are moving sideways, and then they will break out of that particular sideways move relative to the time frame you're looking at. So the process of analysis, and where so many avid learners are going wrong, is they're learning about ICT, they're learning about support resistance versus supply and demand, and they're learning all of these different things. And the underlying premise of that analysis process is so you can determine a place, i.e. when you can trade. So if this happens, then you trade there. And a lot of the time, it's either overly discretionary in its nature. So what happens is you're learning an analysis process, but it's too loose. So it's either too loose, it's too complicated, and it's using too many factors. So what happens is you end up subtly making it fit. So you're like, actually, I think this market is going to go up. And then you unknowingly bring all of these things in without a specific framework. It's too complicated, or it's too loose. So you think, well, and then actually what happens is you end up executing on the trade because of what you think is going to happen. Or at your specific point in the process, if you've got that level of uncertainty, you don't actually do anything because you're like, well, I think the market's going up, but I don't really know what the tools are doing here. Because you're trying to pinpoint when to place the trade off your analysis rather than using the analysis process for a very specific objective, and that is just to determine where that market is in that particular move, not when do I trade. So if you could make that shift, that's going to simplify things for you. Then on top of that, you only want to be focusing on 2, possibly 3 core tools, core analysis tools to be able to do that. So what we focus on very specifically is support and resistance. We also have trend lines, and we also have what we call momentum. They are our 3 core. Now, listening to this, you might be thinking, well, what about divergence? What about supply and demand? What about all these other terms that I've been learning and trying to piece together? Yes, there are other sub-analysis factors that we will use, but unless you can actually use these and apply these correctly, There's no point using the others because these are the foundations that you then build on. And the most important reason we only use 3 is so you can master 3. So I want you to think that way. Your goal is to be able to say, I'm only going to use a couple, maybe 3 specific analysis tools, but I want to become a master of those. And then that might be enough, but I need to be a master of those before I even consider adding anything else in. And the other reason we do this, and this is the key, is if I'm only using 3 tools and I'm using them in the same way, I'm not going, well, I think this market's going up, starting to pull back. You know what? I'm going to whack a Fibonacci on. Oh, look, it happens to be at 50% Fibonacci, even though that's not something you use. Oh, I think I'll take that trade. Or as more of an avid learner, you're sitting there going, well, I don't know what to use here because I know about this, I know about that. This looks like it's fitting this looks like it's fitting that. It's too complicated and it's not repeatable. So your analysis process to determine where you are or where any market is at any given time, not place the trade, just where is it relative to where it's been, needs to be simple and repeatable. So the same tools each time and repeatable, because if it's repeatable, and this is key, it's measurable. So what we're saying over and over again is where is price, and not just where is it, or it's at X price on the chart. Where is it? And this is key, relative to where it's been in the past. Because if I do that, and we'll go and do this on a live chart in a minute, if I do that, then what I can do is say, where is price relative to where it's been? Then what I can do is look at it and say, what condition is that market then in? Is it in an against the trend condition? Is it in a with the trend condition? Is it in a trend line break condition? Or is it in no man's land? I'm going to give you some examples of this very shortly. So what you're basically doing is saying, where is price relative to where it's been? Excuse my writing. Then, what condition is that market in? And then lastly, which is the strategy element of it, what do I want price to do next? And the strategy element is saying, if it's in one of these conditions, then I have a set of criteria that I've tested and I know that works and gives me an edge. And if those criteria are met, think of it like this: A, B, C, and D. If I can tick all of those criteria off, then I've got the setup. But most importantly, I don't even want to be worrying about this if I haven't got the analysis process correct and I've got the experience to be able to do that effectively. So we're going to look at this relative to the chart I've got here. So what you'll notice here is the chart of US dollar Swiss franc. We've been moving sideways for a considerable period of time, and we've just actually broken down lower. You can see, interestingly, price breaks down, comes back, does a little retest of the previous area of support. That's often the case, and you can see we've come down since that point. But what I want you to focus on is the concept that I was talking about earlier, where price for a significant period of time over the last couple of years, and it's not the same on every market, but you'll see this on a lot of markets, especially currency pairs, where we've been moving sideways like this. But within that period, look, you've got your upward move here, and then you've got your downward move here. So let's think about these 3 specific conditions that we're looking to see whether a market is in that condition before we go any further. So the first one, I'm going to draw it in pink, is the against the trend area. So if I have got a system, and we have a very specific system, we don't just draw on support and resistance lines where kind of anywhere. What you want is a repeatable process to do that. So if you see here, look, we've got the support and resistance lines on there. As I see price coming up, then what I'm looking at is if price makes it back up to these area here, we're extended on the chart. We're at the edge of the territory that price has been operating in. So we've got price moving into what is called an against the trend condition in this area here. And knowing that, then I look for criteria specific to trading against the trend. But here's the key. If you don't want to trade against the trend, you don't have to. So it's only if that is a criteria that you want to trade. We also have, and I'm going to change the color on this, we also have the trend line break condition. So if I draw the trend line in here, and there's some very specifics about the trend line. If I draw the trend line in here, then what I've got in this area here is what's known as a trend line break condition. Then further down, Once price gets out of what we call the choppy mid area, you may not have even noticed this before, but a lot of price action within a sideways moving market, the mid area is quite choppy. When we break out of that breakout and this area here is what we call the with the trend condition, and that works in both ways. So if you're able to see where a market is it in an against the trend, a with the trend, or a trend line break condition? And then on top of that, if the market has been moving sideways and it's very choppy, so in this area here, this area here, this area here, this area here, what we would call no man's land. If you've got that, and you can see that price is in no man's land, you can move away from that particular market. So again, I can't in a 20-minute video teach you every element of that process, but I hope you can see here there is a system to what goes on. So not only is there we're only using 3 tools: support, resistance, trend lines, and momentum. We're only using 3 tools. Each of those tools has a set of rules. So if I've got all of those 3 tools written here, they all have a set of rules to help you use them effectively when you're doing your analysis. And then when you determine the market condition, then what happens is after that, you say, right, now I look for the ABC criteria. What specifically has happened here? What specifically has happened here? What specifically has happened here? I look for the ABC, sometimes D, specific criteria. If I use that criteria, if those criteria all happen, if one of them doesn't, I don't take the trade. All 4 of them have to happen in the right place at the right time. Then I can take the trade, and then I can measure that trade. That's the key thing to remember, because your goal, whether you are looking to swing trade or day trade, your goal is to become process orientated in what you do rather than be focused on the result. You want to be process orientated. So then what happens is, if you start logging the trades, you can start seeing patterns and actually qualifying your edge, and you move away from this person that is just consumed with learning information. And what you end up learning is the information that you have about your trades to help you refine and get better. Now, lastly here, I wanted to talk about risk management. Again, a lot of the fear from an avid learner's point of view is you might be thinking, oh, I want to trade, but it's what if I lose? How's it all going to happen? Well, as I said in the previous video, if you can accept the loss, and remember, think about your risk like a big bag of gold coins. It doesn't matter how big your account is. Your focus is to think about at any point within my bag, I've got 100 gold coins in there. If I've got an account that's got 1,000 in, I can split that down to 100 gold coins. They're just smaller gold coins for every single 1% that's there. If I've got 10,000 in my trading account, each coin is bigger. But each time I trade, I'm only taking out one of the 100 gold coins that I risk on that particular trade. And that mindset can help you go from a point of view of worrying about the loss, accepting that you are going to have losses. But remember, if that loss comes in, you've only lost 1 out of those 100 gold coins. And even if your strategy isn't fully developed yet, you've got to be the dumbest trader on earth to have 100 straight losers. You've got to be doing something completely wrong. So if you're managing risk correctly, it allows you to move from that avid learner phase into the next stage. And that's what I'm doing a lot of the time when I'm working with people. Not only am I getting them to strip back the amount of information that they've got, what I'm actually also doing is getting them to a point where now they've got a proven system and they're applying it the same every time, and they're focusing on the process, not the outcome. Get yourself trading so you can get over the inevitable psychological issues of being in the market. Because it doesn't matter how much you've learned, how much knowledge you've picked up, you've got to be able to apply that and deal with the inevitable, what we call random distribution of your results over a short-term period of time. All right. And that's where the key is to be moving away from simply thinking more knowledge is going to make me safer. At some point, I've got to apply what I've learned. And then your learning process as you go through the levels is more about learning more about you, not just about the information that's out there. So that's analysis, strategy, and I've talked a little bit about risk. Remember that gold coin principle. It'll help you stay more relaxed and more calm once you start live trading. But let's look at some of the things that show that you're doing well at this level, okay? Because remember, the whole point of this is to move away from simply just learning information and carefully and strategically applying the right elements to move forward. So the first one is starting to question if all this information, a lot of the stuff you'll hear will be big, bold claims, is you're starting to question if what you're learning is proven. Is there a system behind it? Is there data behind it? Or am I just getting soundbite information that sounds good? Or worse, some of the guys out there, and I've seen it because I've done some reaction videos on TikTok, some of the guys are more than half my age are saying stuff. And I'm like, that sounds very profound, but it does sound like you're really just saying a nice little soundbite here. And sometimes you can tell because they haven't got the depth, and they say something, you're like, well, you're just regurgitating what's in a book or what you've heard on another video. You haven't actually talked about it from the level of depth that's required. And I'm not saying that for everything, but you're starting to see, hang on a minute, what that person's saying there, is that actually going to work? Or more importantly, is that actually going to work for me? And the next one, really important, is you're realizing that more isn't always better, and you've got to strip back. A lot of what I'm doing when I'm working with an avid learner is to get them to strip back just the amount of information. And I get it, that can feel risky, and you can feel like you've put in hard work, and there's a sunk cost fallacy to that, in that, I've done all this work, I don't want to let this go, but it might be that particular thing really doesn't work for you. And I can very quickly see that is holding you back in that process, and we need to strip that away. So that's what I want you really focused on, is that mindset of realizing that more isn't always better. And usually in this phase, that stripping back is the appropriate thing to do. Then here, I'm beginning to simplify. So it's not just a case of just taking stuff out, you're simplifying the process. Is there a framework to your analysis that's the same and repeatable? Is there almost rules behind your analysis so you can't drag in different things that you remembered from learning 2 months ago? You're keeping it very specific, and it's the same each time. And that isn't easy, but it's where the most progress will come from. And then here, I know I must apply what I'm learning and apply it correctly. You've got that, that niggle is getting bigger in your head, that I can't just keep learning more and more and more and more. I've actually got to go through the process I'm talking about here and move to the point where I'm actually applying this and applying it correctly. Then here, warning signs, things to watch out for. You're just watching too much content, or every time you watch a piece of content, you're trying to join the dots with something else, but you're joining the dots without that central pillar of feedback that's critical to determine, is it even relevant to be trying to join these dots? Are these two things that you're talking about here, or you're listening to or thinking about applying, are they even relevant to you? So be wary of too much random content, and just too much content, obviously, is the big issue. Using learning as a way to delay correct action. So if you feel yourself saying, right, yeah, I'm going to start applying what I've learned, and then as it comes to that point where you need to start applying it, you go and learn more, that's a sign to watch out for, that you're not moving on to the next step. Then here, overthinking what you need to do. A classic offset of somebody who is learning too much is they overthink what they're doing. You don't want to swing the pendulum the completely other way and just go, well, I'm just going to trade everything. I'm just going to just go for it and just buy and sell. But interestingly, that can often happen. People get so overwhelmed with information that they either go into a complete inactive phase where they do nothing, or they just go the other way because they know, and they overly force themselves, and they essentially lose the plot and then don't use anything that they've learned. Or they start moving into a live trading environment and they're like a deer in the headlights. They're like, what do I do? What do I do? And they forget everything that they've learned because they've probably learned in a too broad, too much, too many different things that they can't then apply it when they need to. So that's why I've pushed in these videos about analysis and strategy, no more than 3 analysis tools, and have a process to that. The 3 that we use: support, resistance, trend lines, and momentum. And we have a very specific set of rules on how you apply those, and we keep it very simple on those core ones. And then you can add more once you get there. But again, to avoid overthinking, you need to keep things simple in terms of what you do. And another sign that it's to watch out is you're starting to feel mentally drained from the information. There's too much going on in your head. It actually is feeling tired. It's feeling tiring, and you're feeling overwhelmed. That's a really big sign that you're spending too much time in this phase, or not taking the right action steps to actually apply what you've learned. And that's where feedback can be so important, because it can help get you rid of that kind of overwhelming feeling of what do I do next. Then here, keys to success. Less is more. Strip back what you have. I will often get traders in this phase to really just constantly strip back. If you think you've stripped back, maybe strip back some more, strip back some more. You would be surprised, and I know traders that have been in the game 40 plus years, how simple their trading process is despite all the information that's out there. And remember one thing, I've been in this game nearly 25 years. I started out when it was dial-up internet, literally that old noise. Some of you won't even know what I'm talking about, that noise. And I would remember I had partial fills when I started out. So I'd place a trade and it would tell me it's partially filled. It wouldn't execute the way it does here. Execution is better. Technology is better. Charting tools are better. There's more information available. There's more sources of information. It's quicker and easier and faster to get that information. Yet, if you go and look at any of the brokers, the stats are still the same. Approximately 80% of traders are consistently losing money. And that's no different now than when I started in the retail trading game nearly 25 years ago. So that tells you something. It cannot be about the amount of information or the information that's out there, because it's more easily accessible. And that's probably the problem you're having, is it's so easy to fill yourself with all this information. But ultimately, the results aren't changing. So that tells you it's more about the process, not the information. And that leads on to mastering the basics. I said this a minute ago. Focus on analysis and strategy first. On top of that, manage your risk when you do start trading. And putting your money on the line, make sure you manage your risk, but master the basics first. Get good at a couple of things. I would put my money with a trader that has mastered a few technical skills over somebody that sounds like a trading encyclopedia or sounds like Investopedia and can just tell me lots of things. But can they actually apply just a couple of key analysis tools and do that effectively within a framework so they can measure it? And then here, get feedback on what you're doing. If you can, get feedback that is structured in a way that's relative to you, because that's one of the key things that you're missing when you're just taking on information, is you haven't got that feedback loop there. And as I've already said, manage risk well once you move into that stage of trading, because that will often get you out of the learning phase into the application phase if you can do that. So lastly, some key action steps. Learn and apply analysis and strategy. Make sure that becomes your number one focus. Don't spend time trying to take on lots and lots and lots of what can I add. Just say, right, I'm going to learn how to analyze the market so I can tell which condition that market is in, and then I can apply a proven strategy. And then on top of that, risk no more than 1%. Start recording your trades now. Obviously, that comes once you've done the action steps above. But if you can start recording your trades now, that puts you ahead. And each time you want to add something, don't. As soon as you want to add something in because you think it's going to give you more certainty, if you've got the stats and you're building the stats on the numbers of what you're trading, push that down. Resist that urge to add more things in until you've got a clear window of data and you've got a big enough data set. And as it says here, allow a clear window to apply what you have learned. Don't simply go out there, place 2 or 3 trades and go, well, this is not working. Give yourself time. But as a word of caution, this isn't an excuse to sit back and keep learning, but don't go and apply until you've stripped back and you've actually got something that you know you can apply, that's got a system behind it. If you ideally have got data behind it, because that's going to help you be more confident to apply it. But your goal is to move out of this constant learning phase. And I think the key phrase to leave you with is, remember, it's not that you don't continue to learn, but you don't just simply learn more stuff. You learn a specific process, you repeat that process, and then you learn about how to optimize that, and you learn about how good you are. You've got to start turning that learning back on yourself so that you can start analyzing how well you are performing as a trader and not using YouTube as a crutch just to bring in more and more information. So you might be thinking, what's next? Well, feel free to follow me here for more trading insights. But if you're looking for an even more clear, specific and proven route to your own trading success, then check out the links in the description and they'll show you exactly how we can help.